All right, that's kind of working. Wonky. How's everyone doing? Fucking gambling ads. How are you? Trying to get OBS to work this morning was a pain in the ass. But I think I got it up and running now. Okay. Give us that Range Rover play. No, absolutely not. I don't want you to own a Range Rover. How does that benefit me? Tesla Robotaxi event, tank or bank? Did anybody see the photo of like Elon like leaping in the air behind Trump at the rally? What a fucking tool. It's like all his autistic energy just got released at once. Can you ever expected moves indicator? It's just a Monte Carlo distribution. Range Rover means no more hate. I think you're wrong. It's just a car. It's not even a very good car. Great giant belt buckle on Elon as well. This is the worst fucking timeline. I swear to God. I'm eating fish for lunch. Look at me. I'm fancy. Congratulations. Speaking of which, I need some caffeine of some sort. Otherwise, I'm not gonna be able to do this. VRVP, range. What? I delivered a salmon dinner at 7 a.m. for Uber. Are they fancy? Only if they fed it to their dog. Also, who the fuck makes a salmon dinner at 7 a.m.? Is it from like IHOP? Energy drink? Oh, I do have energy drinks. Do I want an energy drink though? Eh. Just have like tea or something. Hmm. Tempting. Good morning, Essa. Did you see Ryan Cohen's tweets? No, I don't pay attention to anything that Assad has to say. Speed Quantoc high on taurine and caffeine. I feel like the mornings where we have too much caffeine, the member stream extends out to be like 4 hours long. Good morning, Mac. I think what we'll do today, because I think it's important, is we'll cover the Mag 7 and then we'll go over indexes with Nuke and JFresh, or Dirk and JFresh, and they hop on. Have you abandoned all hope on your AMD spreads? I don't have a lot of them left. I closed some when it first dropped. But I do have a few, and they are underwater. I mean, I don't think Nvidia is going down right now. I don't like AMD's options chain is still kind of shaky and probably not very supportive of its current price range, but it's getting carried entirely by Nvidia. So I don't know if it matters, right? Amazon and AMD both got kind of fucked on news this week. Like Nvidia pumped super hard, which pushed AMD up, and then like the day after on Amazon they ended the strike. I don't want to. Why would I do that? I dumped my Microsoft just before it got crushed into close on Friday, but I was still up, so no complaints. Yeah, I closed my Microsoft too, mostly because well, it was up a lot, and then also it's hard to justify going long QQQ into the weekend while still being short Microsoft, right? You've been trying to short gold for like 4 fucking months now. The dollar risk isn't really changing. I mean, it's not, I don't think central banks are going to start dumping any. There was a point where they could have, right? But I think there's too much risk in US treasuries for them to dump any substantial amount of the gold that they've accumulated. Not to mention the yuan's going to start getting crushed by the rising dollar again, which is going to be probably bullish for gold. Unless they start buying back into UST, which they might. I want to short China. I think it's too soon. Yeah, I could cover AVGO. It's been getting a lot more volume since the split, so I don't mind going over that. I usually cover like a few outside of the Mag 7, like AMD, Netflix. AVGO seems like a good candidate for that too. All right, let me get some caffeine of some sort, and I'll be right back. 1 minute. All right. China has holidays this week. Goody. And I think for China, the real blow is probably going to either come when yuan falls against the dollar again, or with their next big round of economic data, right? If there's no improvements in manufacturing and employment, that's gonna be a pretty big blow. That's usually how stock splits work. I still miss AVGO pre-split. It was better. There were some sweet moves on that before it finally split. No data, keep going up. Well, China just doesn't release the data. I would I would buy that. That seems perfectly reasonable. Hold on. I'll make a new tab for AVGO. No, no, I don't want to do that on this. Fuck off. Maybe I should be over here with the A's. There we go. Thoughts on PAX and TCPC? I don't really have any. I don't own TCPC anymore. You guys still have this, or are you trying to buy it? I haven't owned this in a long ass time. It's very cheap. I think the yield's still okay on it. 16.55%. Payout ratio is ridiculous. I think the fund's coming to a close, though. PAX I could check out. PAX down to 11. Might start to turn around on rising rates. I think I bought some the first time it hit 11, but I don't have my broker open, so I'm not sure. I know I bought some at 12.50. This has probably got another year before it starts to turn around, but I don't hate this price. I might try to aim a little lower towards like 10ish. It's going to be a while before they start to get returns on the infrastructure investments they've been making. So there may still be some bleed as capital flows out, but there's no returns on it. I would say probably over Q3, Q4, and then maybe like a little bit of recovery into early 2024. Mostly I've just DCA'd this. So I know my initial buy-in was around like 1280, and then I bought it 1250, and I think I bought one other time, but I'd probably be willing, if I haven't bought it at 11, I might buy in this range. If I have, I'll probably wait till like 1050 or 2025. Yeah, of course. Duh. I saw it's the same in terms of price. Yeah, I mean the dividend's still fine. Seems to be largely unaffected. I know they made big capital investments last quarter, and that's one of the big reasons for the huge miss on earnings. And well, it wasn't that huge of a miss on EPS. I mean, it was just flat, but there was no beat. But I think some of those infrastructure investments are going to start turning around for them. They also spent a shitload of money. They bought out like Credit Suisse's real estate portfolio. They bought out another real estate portfolio as well. And getting returns on those is going to take some time. So a lot of cash going out, but not none of the returns coming back yet is largely the issue here. That, and Brazil's economy has been questionable. In terms of emerging markets, I mean, none of them are going to fare particularly well with the dollar rising. But as the Fed moves forward with more rate cuts at some point in the future, which may not be anytime soon, those emerging markets will start to do a lot better. You know what has been performing really well is PBR. PBR has been doing pretty good. I don't entirely hate the new CEO. I'll probably wait for a lower price, but I might get back into it again. The dividends are not what they used to be. And I still sold at a substantially higher price than it is now. Um, but the dividends aren't bad. I mean, they're still they're still quite high, given everything else, and I mean, probably not going to get 15% anywhere else on oil, right? There's a lot of inventory hitting the market generally right now, right? Agents had been sitting on a lot of inventory waiting for the Fed to cut with the assumption that mortgage rates would go down and we would get a flood of new buyers. So I think someone showed me on like Redfin the number of new listings following the Fed rate cut had like gone up like 980%. Is there still a risk for the dividend to get cut, or is that calmed down? Well, the new CEO is not so unaligned politically with Brazil's government and their current labor, like the Labor Party that's in power. So I would say Lula is less likely to stick his dick in things and fuck shit up than he was with the previous CEO. However, yeah, the dividend's already been reduced pretty dramatically. So um, if they don't want to scare away too many foreign investors, they're probably not going to mess with it again. Um, the only problem is, anytime there's a question of, government funding, or there's a lot of political pressure for the government to spend money, the first place they turn is like PBR. And they talk about a lot of things like, oh, we're gonna cut the dividend for foreign investors and stuff like that, and that spooks everybody. And ultimately, they never do. Not any serious amount, but Is tax still on your radar? Yeah. It's not going to perform well right now with the yen declining. But it did get a little boost. Bounced back up to like 15. Which isn't bad. I think this, I mean, the whole purpose of buying tack when I did is it benefits pretty greatly from a rise in yen, right? They have a lot of domestic sales, so um, it should help their earnings as yen goes up. Yen is not going up right now. The new PM is saying all kinds of shit that are all kinds of shit that's just completely against the platform he ran on to get into office. Typical politician. But yeah, that'll have to settle down. I'm sure the BOJ is going to continue its course of rate cuts, but they don't want to freak everybody out. And like the second he got elected, the Nikkei started just tanking, right? Like it went down like 6% that night. Because he was kind of, at least his platform as he was running was um heavily favored Japan, normalizing monetary policy, getting rid of their long-term trend of deflation, bringing more assets into, you know, encouraging asset purchases by Japanese nationals, and bringing the Japanese populace more into the Japanese bond market and away from the U.S. bond market. So they wanted to really incentivize those asset purchases, and almost immediately upon getting elected, he walked all of that back. So I don't know if he just did that to allay the fears that the market had from him getting elected, and he still plans to continue forward with the policy that he projected, or if, now that he's squarely in everyone's pocket, he's just going to do the opposite of what he said he's going to do. Either way, I mean, it doesn't matter. The BOJ is still independent and hawkish, right? Over the mid to long term. I'm a person looking to buy a house. I want to see if the 10-year yield goes down. I mean, the 30, ideally. How 10-2 down, but 10-3 up? Well, because the 10-3 is going to immediately reflect rate cuts, right? And the 10-2's not down. The 10-2 spread's tightening. Uh, but says the 10-3, just not at the same rate. Like, I mean, the 3 month isn't going to exceed the current federal funds rate ever, right? So it does have kind of an upward cap. Yeah, rates ripped on Friday. Yeah, just absolutely fucking mooned. The yield curve's pulled back to like almost back to where it was in early September. Prior to the Fed rate cut. Like we're yields are higher now than they were when the Fed cut. Than they were before the Fed cut, which is ridiculous. So SPX 6K by the election. I don't know if SPX is going to 6K. It's an arbitrary target, but there's some room to the upside for another leg up. I mean, we're gonna run into resistance on the upside the same way we did last time. So we do have like an upside limit to how far the market can run. I think QQQ has a lot more range, but that's because it hasn't recovered at the same pace that the S&P has. 6,300 according to Jamie D. Wait, did JPM finally revise up their year-end target from 4,200. $6K is about 5% from where we're at now. Let's see if I can find it. Was it just Jamie D or was it JPM? What's your view on TLT over the next 3 to 6 months? Do you think the market's already priced in the rate cuts? I think the yields at the top end of the curve are going to go back up, which is what I said when the Fed cut. Banks are still in the same position. Like nothing's changed, right? And inflation's now going to start to pick up because the Fed cut rates and labor's stronger than they expected. Well, at least this labor report, which is also incorrect and will be revised down later, but we can ignore all that. Just Jamie D. Oh, I don't care about that. When biggest bubble of all time? I think we're in it, right? The S&P has returned like 65% since October of 2022. Could it get any bigger? Yes, but not much. Guess where I went short? Bottom of 2022? Here? When I said go long? No. Don't wink at me. October 23. Okay. There's no reason not to cash out here. It can't run much more. It could run a little bit more though. And we've been getting profit taking, right? I mean, we just came off the back of a 10 and a 5% correction in the last 3 months. So there has been profit taking. The question is, does that money come back into the market? And the answer is probably not. I'd expect that we're probably going to continue to see RRP swell because rates at the front end are will no longer match the overnight rate offered by the Fed. So all of the money market money that people are like, oh my god, this is going to come back into the market, but is actually already in the market, is probably going to leave the market. We're also yeah, I can go into that later, but we're also we're a lot more split in where that money is going now compared to where we were in like May, June. Like all of that money is not going back into tech, right? The market's a lot more divided in its view of the possible outcomes. How's the refinancing of corporate debt looking in the markets? Wasn't that going to be a big deal? I mean, we've hit some of it, but not all of it. There's more there's more out in 2025. boomers are going to take out their money to safer instruments. Well, they haven't yet. And everybody who's done that over the last 6 months has gotten punished for it, right? There's finally some skepticism regarding AI in the media as well. Not enough. I mean, on the AI front, Nvidia's still got to miss earnings at some point, right? Before anybody's going to believe any of the skepticism. Punished so far. Yeah. Well, I mean, think about this, right? The Fed cut and everyone started buying into bonds, and now bonds are tanking again. I mean, I've talked about this with you guys on several occasions now, but I mean, banks are still largely in the same position they were as far as their hold to maturity securities go, right? And they need a pretty consistent cycle of risk on into equities and risk off from equities into bonds when yields are elevated to continue to roll all of that over, right? And it's yeah, we could very well be in a market that continues to do this as long as the Fed is capable of, manipulating sentiment enough. Not they're not mechanically manipulating anything, but they still have a lot of control over sentiment because people believe that the Fed has some sort of actual effect on the market and that Yellen hasn't just completely taken the reins of monetary policy away from them. Um, and I mean, like, the Fed immediately started walking back their dovishness by like the following week. And now we've got rates moving right back to where they were. But the effective federal funds rate is 50 points lower, which tells you how little effect the Fed has, right? That's I mean, that's an outsized cut and it's done no damage. And the yield curve's reinverting, inflation's reigniting. I mean, the only thing that's really going to change here is if inflation comes back in any meaningful way, like we start getting, CPI at point 0.4, point 0.5 month over month. There's going to be less pressure from the Fed funds rate to keep inflation in check. But don't worry, I'm sure JPOW is willing to hike rates again. You mentioned like seven-ish more cycles of risk on, risk off. That's a lot of cycles. They're underwater a lot of money. It's like you're talking about like 13 trillion in unrealized losses, right? At the top end of the risk. Arthur Burns, very possible. Yeah. Yeah, there is a possibility that if inflation reignites now, there won't be a way to temper it. Oh, hold on. All right, weird. They have 30 trillion in unrealized gains in equities. No, they don't. They've made some money on equities, but not that much. I didn't say in dollars. In what currency then? Ripple? Imagine those losses compounded by rising inflation and falling GDP. Absolute destruction. Debt to GDP reaching 200%. Debt default risks. Yeah, then we end up in a debt spiral. I mean, the only thing that could prevent us really ending up in a debt spiral would be Yellen beginning to issue debt at the back end of the curve. But is she? Is she going to issue like bonds? I mean, she's such a greedy little fucking hobbit. What's that quote from Lord of the Rings about the dwarves digging too deep? That's Yellen. Anyway, let's talk stocks because I've only got like 20 minutes now because I'm bullshitted about the economy for too long. All right. Let me pull up the goodies. You know what? I don't even need to do this. We could just do this. Ooh. Use my own fucking data. Let's go. All right. Start off with Apple. Apple's still got quite a lot of resistance to the upside. If we go out to the October OPEX, there's still quite a lot of sold calls at 230, 235. Sold call gang, rise up. I know some of you sold calls on Apple. It's been awesome. It's really been had a rough time reattaining those levels. Gamma Max is still around 240 though, so not out of the question for it to bounce back. Um, Gamma's been, kind of falling off since September 19th. If we see another rally in QQQ, this might pick up again and squeeze out some of those short calls. So now is probably a bad time to continue selling calls on Apple. But there may be an opportunity if it gets up around like 235, 240 again. There's a decent amount of delta to the upside on the chain, but not too much. And with most of the delta already in the money, it's more likely that future expirations are going to see that support trim back, and Apple is going to start to decline maybe sometime towards the back half of October, November. It loses quite a lot of OI on the October 18th expiration, as you can see. But those sold puts at 230 still offer a little bit of an upside shot. It's just slim. AMD. So we got the sold calls at 65 in the money. Still support at 60, 155. There's the gamma. I would say AMD's probably still pretty weak below 165, but the chance for Nvidia to keep pumping and AMD to squeeze out the 170 calls is just too high to continue carrying the risk. Like, but under 165, I might be a little more willing to short that failure again. It actually didn't play out too badly the first time around. And then, support down at like 150. But I wouldn't want to short it here. There's way too much risk that it continues to move up with the rest of the semis. It's picked up a little delta and gamma too. Gamma max is 175. Volatility is starting to turn around as of Friday. Yeah, it doesn't have a lot of more upside room. A little bit, but not a ton. Yeah, I would short it if it lost 165, but not before then. I'll probably cut the debit spreads I still have open on Monday. Amazon, Dock Workers Union thing broke. This is probably going to move up. There's sold calls at 190, 195, 200, which will present some upside resistance, but not a lot. Um, the strike's over, and they announced, I think they also concurrently with the end of the strike announced that they're cutting 14,000 managerial positions, saving them 3 billion in overhead a year. That might be viewed as kind of bullish too. I don't think the positioning moved a lot on that, but um I think there's enough upside interest that if we can get above 190 and pressure the short calls, that it can push up to like 200 again. So a little bit of a bounce there. AVGO, right? AVGO looks pretty well supported. 180. Mm, decent amount of out of the money gamma. Falling a bit on the 30 and the 10, 60. So kind of run the gamut. It's probably got room up to like 82, maybe 85. $90? Pretty much all call interest out of the money. 80s are, I think, sold. Yeah, it's probably got $10, $15 of room to the upside. It looks pretty solid. Um, Vega losing solutions too. Some of this is a little front weighted, so that's kind of bullish. There's a bit of March interest out on the 190 strike, but almost all of the calls at 196 are for October 18. That's interesting. 190 split. Looks like that 200 calls are pretty short dated too. Like 10,000 calls on 1018. I think the dollar pump is going to lead to a big pump in tech. They're leveraging up the carry trade like crazy, and tech has a lot of upside room, even though S&P doesn't really. Truth or lie, I'll go first. I find myself an offshore oil rig. I'm still holding GME. I've set off a gas detection alarm with a pooty tootie and caused a local evacuation. You're not on an offshore oil rig. EXE. I don't think I have data on them. Yeah, we could take a look at Deviant in a minute. Thoughts on Reminiscences of a Stock Operator? It's nothing. It's like a fine book. I don't really know if you're going to learn too much from it, but there's nothing wrong with reading it. Yeah, I mean, with the majority, I went long TQQQ on Friday and also bought some QQQ, but with the majority of tech looking like it's going to benefit from the rise in dollar, I would say that TQQQ is just like the easy answer because you don't have to pick stocks. But some of these stocks, like AVGO, right now, look a lot better than others, right? So there probably is some benefit to stock picking. Google pretty bullish above 170 out to like 180. Not a lot of that interest on the 118 strike though. So Google doesn't look as great to the upside. There's a little bit of delta there, but it looks kind of weak. Yeah, Gamma's starting to decline. It's already kind of at Gamma Max. Uh, Came close to testing it on Friday, so not a ton of out of the money interest. Hmm. GN moved back above DN. Delta's falling off. Yeah, Google doesn't look like it has a lot of upside. We got Meta. That kind of looks like shit. Google might be a decent place for some call selling or getting close to a decent spot for some call selling. Meta's at Gamma Max. It can exceed that, although a little bit of a drop off in Delta and Gamma going into Friday. Gamma Max has been rising with the increase in spot, so it's staying pretty much on trend. 600 is a huge resistance level. So Meta might be kind of topping out a bit here on its run. Microsoft has been underperforming and is still kind of in a bit of a range of some negative gamma here. I think a bounce back above 20 would be bullish, but it may still continue to pull down to like 410. Microsoft has not been performing well recently. I would say these puts are probably being sold to the downside. Vol picked up. This is a pretty good spot to bounce. It's right at gamma neutral. As of Friday, it looks like Friday it bounced off of gamma neutral. Low was 414.97. Gamma neutral is 414.75. But didn't close substantially higher, which probably isn't a good thing. Although gamma picked up a little bit. So maybe some shorter dated bullish positioning came in. Yeah, it looks like there's a bunch of 420 opened for the 1011 expiry. Not much at 415. Okay, some of these were opened. The 417.50. So maybe a little bit of bullish positioning coming in, targeting the 420 strike on Microsoft going into October OPEX. But that may have a little bit of a hard time with the continuation off of this bounce. If it gets above 420, things start to get a lot more bullish though, and it could run out pretty far. So it's got a lot of range, but it may not have enough support yet to bounce. Netflix, Yeah, we could look at Netflix. Netflix has been kind of choppy lately. Netflix looks like it's got $30 of room to the upside, and plenty of call interest to the upside as well. Some of that quite short dated. Netflix looks bullish as fuck. 730 or 740 maybe. There's still a decent amount of delta to the upside. Interesting. Bum, bum, bum. Let's see the 10 fall up. Yeah. Yeah, it looks pretty good. Netflix looks like it's got some room to move up. Maybe 740. It's not only well supported, but plenty of out of the money interest. Tesla? Or no, Nvidia. Nvidia got above the sold calls at 120 last week, pressuring the sold calls at 125. Next stop is 130, and it looks like interest is starting to build out to that strike. Some of this quite short dated out at 130 for 1011, 1018. Not a lot of delta out of the money, but a decent amount of gamma. It is getting a lot of shortfall though. Maybe that will start to turn around as realized vol falls. But this also well supported at 125 as long as it continues to hold that. I would say it's not going to go much above 130. So there might be a play out to 130. If not, it might be decent to sell calls on this. It might be kind of nearing the top of its range for the time being, at least. But there is still like $5 more upside in it. Tesla doesn't have a lot of room to the upside either. Maybe like 280. Yeah, 270. It's probably about where Gamma Max is, 275. It's like 260 and 270 are going to be pretty big resistances. Although some of this interest out to 300 might be due to like the robo taxi announcement. I think that comes this week. If it's a wild success, I could see Tesla hitting 300. I just don't see how Tesla's robo taxi event will be anything other than a nothing burger. It's not like they magically developed tech that's 10 years out yesterday, but we'll see how well Elon does at lying to everyone. Can you check out Chewy? Ew. Why? Are you guys still holding bags? Gross. It looks like there's just a lot of sold calls at 30. Didn't DFV sell his Chewy? Why are you guys still in it? Gross. It looks like shit. Back to 19 bucks. Sold calls have positive gamma. It doesn't matter. Those are naive gamma calculations anyway. I'm not looking at any of those. Anyway, I don't have them. I can tell you right now. Did you talk about Carvana yet? No, I didn't. We could take a look at it though. The Is Carvana done with its Vegas squeeze? I don't know. I don't know, Poopy. Popcorn. Well, I think both of you guys are shorting Carvana, right? Could still get to 185. It's holding above VN. Decent chunk of Delta fell off on Friday, but not enough. I think it'll probably kind of trade flat over its current $5 range until maybe October OPEX, and then when the rest of the supportive options at like 77.50 or 75 fall off, um then maybe it finally fails this top. It's still got like $255 room to the upside. Not a lot, and it's getting to the point where it gets a lot more bearish below 175 now. But I probably wouldn't short it unless it failed 175. Yeah. The Vega exposure on it picks up all the way out to 200. I wouldn't be surprised. So it calls add to positive gamma. They're sold to the MM, so the MM is long the call. I don't have KMI either. It doesn't have enough options interest. You look at stocks with like no options interest and wide spreads. I don't track any of those. If they don't have liquid options pools, there's no point in looking at them. I have Marathon. It doesn't have a lot of options on its chain either, but I do have it. Looks like there's a decent amount of call interest out at 30. Not a ton, but it's longer dated. So there's plenty of delta on the strike. Gamma max is around 30. It's starting to look a little bearish. It's in the money profit taking. Visa? Do we not have V? Oh, we do. Visa's hanging out just above gamma neutral right now. Delta's picking up on it a little bit. The labor data should be kind of bullish for it. It's got a pretty clean run if it breaks 280 out to 290, so about $10 of range. Although a lot of that's longer dated. It's out at like November OPEX and out on the leap expiration. But it's got support at 275, sold calls 280. So I would say it could push up. The range it's in currently is kind of volatile, but above 280 things get a lot more bullish. What's up, Farmville? Yeah, I mean, there's probably some like small and mid caps that we're not tracking that we should, but we have to kind of like go through them and hand select them because a lot of them are just dog shit, or all of their options interest is at like 2 strikes, which isn't very interesting. At least in terms of using options data to do analysis, it's kind of pointless. And that's like most of the R2K and like the lower end of the Russell 1000 is just like a shitload of stocks that have all of their interest between sold puts at like 1 strike out of the money and sold calls at another strike out of the money. And then they just chop in the like $5 range between those, which are fine for selling things like short strangles, right? But there's otherwise not really very interesting. Positive Gimmer was created by participants selling options more than buying relative to the strike. Not necessarily. But yes, I mean, most options are sold, right? By participants at least, especially indexes and mega caps. Meme stocks have like cyclical options exposure though, right? Like when short vol pulls back, options interest on them increases really rapidly. But then they go back to an environment where they have extremely low options interest. GME is like the perfect example of that. Its chain will go from like, having a ton of options interest to having basically nothing. Quantoc, I'm gonna go grab them right now because I'm done with the stocks. No, they're in the wrong. God damn it! You guys are in the wrong room.
What? Oh, this stock is popped over again, Max.
What did?
What room are we supposed to be in?
The fancy room. We always do the fancy room. This is just the generic room. So
We decided to get in the huddle space this time around.
I've loaded my charts into the wrong place.
Oh, you want us to switch over to the boardroom?
No, it's fine. I could just open them anyway.
Oh yeah, you got some charts here. Love it.
Yeah, just a couple. There's not a lot of interesting shit going on, right?
Seasonal factors. Oh.
That's yeah, so that one's actually kind of interesting as far as the NFP report goes for Friday, which I can't tell. It looks like they revised it back to 159K, but I'm not sure if that was just August's revision.
Who knows? What were the unadjusted numbers? Wasn't it like public or private payrolls like minus 400,000 and then public like 800,000?
I think so. It was so it was 45K government, 31K local, 16K state. or 31K federal, 16 local, 13K state.
Yeah,
So
that's adjusted though. There was
yeah.
unadjusted. There was like 800 something thousand teachers. Happens
Nice.
every year.
Are they teachers or are they just like faculty members?
Oh, they revised August up from 142 to 159.
Yeah, I know.
Yeah.
Yeah, economy's booming.
No, everything's great. Time for the dollar to go up, the yield curve to reinvert, and tech to pump. Right?
Let's do it.
Yeah.
Wait,
Love it.
Tech's got so much room to the
which way
upside.
are you? You're saying yields go down?
No, yields go up.
Oh yeah.
Yeah, dollar up,
Yields
yields
go
up, tech up.
up.
Russell will probably Russell in like manufacturing and utilities and everything that did well when everybody was afraid of rate cuts will probably plummet. But tech should do really well, right? They're gonna throw all that leverage into it before earnings, and then earnings can disappoint us again.
Yeah,
But it
let's
won't
do it.
matter if earnings are disappointing if we're at an all-time high when they happen, right?
Yeah, I'm. So we were just sitting here. We're playing with the little scanner that we're developing for.
Oh,
Wink,
fun.
wink.
Yeah.
I was checking like the the price action that I'm calculating and seeing if it matches. And so we're going through Gamma Strike, just looking at all the tickers, pulled up literally like 30 tickers, and they're all just grinding on Gamma. I'm having a hard time finding tickers that aren't at Gamma.
Netflix.
It's a what? Netflix. Let's take a look at that.
I just went through a few, so I could maybe help. AVGO.
I'm just saying, man, it's
They're
wild
getting.
out
I
there.
know they're getting close. Google.
Oh, okay.
Google's not near. Well, Google actually
Netflix
is
is
kind of near Gamma
pretty
Max.
close though.
Yeah. Yeah.
Sounds like consolidation time.
Well, I mean, we're pretty much out of money. We're pretty much at max leverage in terms of the past two bubbles that have happened this century.
Nice.
So unless people take on an unprecedented level of leverage, which could happen because nobody wants to own dollars, but I don't know why dollars going. Nobody wants.
Dollars
Yeah,
going
we
up
could
because
go higher.
yields are going up. Well, I mean, stronger employment translates to stronger inflation, right? So more valuable dollar, but it buys less.
I
So
guess
it's
I don't
getting
know.
in
I don't know
shitified.
how forex works. Forex is a mystery to me because it's all relative to other.
It's not, yeah, it's relative to other currencies,
So
but
I
I
don't
mean,
know
it's
that it
not
really
that
is telling us
mysterious.
much of anything.
Here's what's important: the dollar is going up against the euro, the pound, and the yen, super fucking hard.
Well, what are commodities doing relative to the
Going up
dollar?
Well, we have a ton
straight
of
up.
risk premium priced into oil, which is valued in dollars, right? So, I mean, oil went up like fucking 8% this week with Biden like fumbling the Iranian like oil field airstrike info, right?
Yeah, I don't think it has anything to do with that. I think it's just
Well, what
shorts
about
getting squeezed because people are.
Well, yeah, I mean
Uh,
the shorts are going to get squeezed because well, all the CTAs have been net short oil since like 75, and then they were starting to bleed out of their position in like the 60s, but now the risk premium priced up, so they're all underwater again. I don't think
what
they're
about
Yep.
gold?
squeezed out, but like they're not in a good spot.
What
And
about
I
gold?
mean, if we actually do strike an Iranian oil field, oil's going to $100 a barrel, like overnight. And then they will get squeezed out. They will get fucked super hard.
Isn't
But
gold going up though?
yeah,
I mean,
gold
it's
gold
been
is
going up, but it's
yeah.
kind of been
Here's what
a little
gold's
bit
not
better.
doing, going down a lot.
No.
Yeah, because like if we're talking about dollar valuations, right, and how far your dollar goes, I mean you got to compare it to some sort of low volatility commodity.
Or you could just compare it to houses and stocks, or do what I do, which is just look at what percent of the average household portfolio cash.
Someone sent me a bunch of Zillow listings from Charleston, South Carolina.
All right.
Like within the city proper, and
Yeah.
all of them were bought in 2020 or 2021, and they're all being listed for 500% more than they were bought for.
Sounds
What?
about
Yeah,
right. Probably renovate, probably a flipper or flippers.
it
Yeah,
was
they'll have
pretty
a
funny.
TV
Like
show.
$600,000 homes being listed for like 4 million.
What was the show on South Park that Randy was doing where he was flipping homes? What was that called?
Don't watch South Park very much.
I don't know. I don't remember that one.
I
It
know
was
it.
so funny, but yeah,
I've
he became a
seen
flipper.
memes from the episode, but I don't remember the context.
Yeah, what was I gotta remember the name of the show because it sounds exactly like what is happening. South Park Flipper show.
Yeah, Florida's screwed.
Yeah, their real
More,
estate market's like actually crashing. Well, they can't insure their homes anymore,
yeah, another
and
huge insurer just left the state because this nothing. Another
yeah, and
Really?
hurricane's
That's
on the way,
cool.
and they're just like, I'm done.
every time it rains, all their houses are 3 feet underwater.
It's called White People Renovating Houses. That was the name of the show.
That's the perfect name for the show.
Yeah,
Yeah. It sounds like it's happening in fucking Charleston. Is just the whole idea that you like replace the flooring and all of a sudden your house is worth 5 times as much. You put in a lawn or something, right?
Yeah. Well, I mean, I guess what you do in Florida now is you just cut all the drywall and siding off of the house up to like the 4 foot level. Just leave the frame, and then waterproof the frame, and then you have like half of a house. It's like Donald Duck.
You put the house on bottle jacks, right? And then you raise it up 4 feet, and that's perfect.
Oh,
Just
you
leave the
keep the
bottle jacks
walls?
there.
That sounds
Yeah, yeah.
expensive.
You know,
It
you
sounds a
just you
lot
put the
cheaper to just cut everything below the 4 foot mark off of the house. That way
or
the
just
water
yeah,
can just flow through really easily, you know?
just
that's
fill the
interesting.
home with 4 feet of self leveler.
I wonder if we're
There
gonna
you
get a
go.
resurgence in hookworm due to all of the hookworm throughout the
Was there a
1800s
resurgence
and
of it?
well, throughout the 1800s and 1900s, it was blamed for the substandard IQs found in southern communities.
That sounds like
It
fake
lives
news.
well, no, it was like extremely widespread. Huge numbers of people had it. There was like this doctor that went all around the country giving people medication for hookworm, and he brought up like the socioeconomics level of the South like single-handedly. You can look it up. It's a really famous like medical thing. um
Weird.
but yeah, I mean, it's present in the like the soil there, right? And since everything's flooding all the time and everyone's just hanging around in floodwaters, I wonder if we're gonna get like a big spike in parasitic infections.
An
I don't know.
idiocy epidemic.
Hmm.
An idiocy epidemic.
We already have one of those, but it could be worse.
Yeah.
Uh, can we talk about the chart you have up? I'm just looking at it right now, and it's
Yeah, it's
marvelous.
disgusting, isn't it?
It's marvelous,
Which
dude. This
chart?
is great.
This
Just
is
on his
the
stream,
this is the various the short and long end of the JPY spreads, or well,
yeah,
synthetic
forex.
swaps, and then the yield curve vol curve comparison that me and Dork
Yeah,
made.
go for it.
Well, leverage on the 10-year has skyrocketed, right? Like, so on the long end of the carry, with short paper finally winning on the US 3 and 6 month, right? And yields coming up. So the short paper is no longer getting burned. Now they're leveraging up the back end of the carry super fucking hard. It's gone from 6.2x leverage to 7.22 in like a week. Meanwhile, the U.S. yield curve has reinverted back to where it was prior to the actual Fed hike, and is almost like the 10 and 2 are almost inverted. The 10 years at 3.96, 2 years at 3.92 now. So if inflation is hot this week, which it probably will be, despite seasonal adjustments, we're probably going to see the yield curve reinvert, which is
Yeah.
hysterical for the like $1.2 trillion that went into like longer dated bonds 3 weeks ago that are now down 6 to 10% across the board.
Dude, what a fucking balancing act this has been.
It's
Like,
impressive. I mean, well, think about it. Like, the Fed has a big hand in it, right? Like, the Fed cut rates and then was immediately hawkish the following week. They're like, no, we're gonna cut rates. We're gonna cut the fuck out of them. We're done. We beat inflation. We're walking everything back. It's over. Labor's strong. Economy's great. We're getting our soft landing, right? And then, like, literally the next week, Barkin writes a paper on how it's too early to declare victory. And then J-Pow
uh,
starts walking back all of the rate cuts, and he's like, well, we might be able to do some more this year, but we're going to remain data dependent.
it's the hawkish
Well,
cut.
it's hawkish ease, yeah.
Yeah, the
Um,
We
hawkish
called it
hawk.
the hawkish ease,
We
dude.
did, we did. I mean, we definitely called rates going right back up again,
Yeah, no,
which they have.
I've said
I've
it
been
before and I'll say it again. Rates will rise regardless of Fed policy.
So the reason
I've been beating that damn drum all year, and everybody in this community has said I was stupid because there's always
whoa,
somebody there to buy duration
I
at
never said
four
you were
at four
stupid.
percent, and then Drunken Miller comes out and says the same thing I did. Now all of a sudden it's full to short bonds.
Yeah, but he has money and you don't.
Yeah, that's true.
Yeah.
I mean, I've been beating this drum since I don't even know. Like it was like mid 2022 when I was just fully fucking doomered out, and I mean, my
Wait
thesis
until the
hasn't really
I
changed.
know we all
I
want to
can't wait
claim
until the
credit
short
here,
end.
but can we just we've all been on this for like 2 years now. Me, you, and Jay Fresh have repeatedly said if the Fed cuts rates, rates are going to go up.
Yeah.
That's yeah. And I think we've been the only ones to say that until Drunken Miller though. Actually, Jamie D said that at one point when he was feeling real
You think?
bearish.
Do you think
Uh,
Druckenmiller's in the PJ?
Do
he might
you
be.
just like bored billionaires? Maybe
I think they're in here lurking.
just lurking.
I mean, it was New Year's Day 2024 when I said rates will rise regardless of Fed policy.
How funny would it be if the short end lifts off the F?
Oh my god.
You mean in Barry's Yellen? I thought JPOW just cut rates so Yellen could issue another quarter of short term debt.
Yeah, I mean those two are definitely taking it as far as.
Yeah. But she only gets one more quarter out of it. And then if she does that, inflation's going to get so high after the seasonal adjustments that the Fed's going to have to raise rates again.
Well, they won't raise rates. They're just going to keep them exactly where they're at, and then you will see the short end of the curve rise off of the fucking Fed funds rate.
Yeah, it's
But
a
until
mess.
it until it does, all the money just goes into RRP though, right? Like who the fuck is taking 4.64 on the 3 month when they could go get 5% in the overnight?
Yeah.
It seems stupid, right?
But
Yet
dude, if that
RRP
happens, that's
not.
just chaos.
We should probably look at RRP, right?
Its price is it still going up?
No, it's been going down since the end of the quarter. It's at like 3.3 330 billion. End of
Okay,
quarter,
we're
it
down a little bit.
peaked at 465. That's pretty normal. Like end of the month, end of quarter for RRP to rise, but it's very odd that it's going back down again despite short-term rates not being anywhere near the repo rate. What's the yield on the 4 week?
I mean, it kind of makes sense though, right? Like the thing is, if you think that the carry trade is going to start, the spread is going to start contracting, right, or it is contracting, you're trying to get that last little bit of arb out of there, and the way you do it is through treasuries.
What the fuck is the 4 week? I can't find the 4 week.
Is there a 4 week? There's
Yeah.
just 1 month. U.S. 1 month.
Or do they have it listed as 1 month on here?
I think so. Yeah. So U.S. 01M.
01M.
That how many weeks are in a month?
Between 4
4.2 pop,
and something.
4.27, something like that.
Jesus, look at that.
Super healthy.
Dude, they're all gonna get so fucked if we get a hot inflation print.
Yeah.
Although maybe not.
I
You
mean,
know
it's only
what?
going to go back to 5. It's not going to go any higher than 5.
I think that they've got a little bit of leeway to control the narrative on that. If they get a hot inflation print, they'll just be like, "It's just a blip, bro."
They're all short the fucking 4 and 8 week, though. Like, they're short everything out to the 2 year. Because they have to maintain the cost to carry on the long end. So everybody's short the short paper. This is great for them, don't get me wrong, but there is an upper limit to like where the 1 and the 3 month are going to go because the Fed fund rate isn't going up, right?
Yeah, but spending is. I still think. I mean, the Fed fund rate. I mean, the Fed is at the becoming completely irrelevant, which which is pretty fucking hard to do. But they're gonna find a way to become irrelevant thing in the financial world.
I mean, the Fed, honestly, like 2022, they were able to be relevant because they went hard, right? And ever
No,
since
it's
then,
just that people believe them.
well,
They
they kind of did, and they caused a reaction in the economy, right? They caused a knee jerk reaction from business leaders to become more conservative in their spending because they knew that debt issuance was going to be more expensive. But
But it was
now,
driven by sentiment and not by mechanics of rates.
no, right? Well, of course. But now we have a Fed who's just remaining data dependent and not doing shit. I mean, the Fed, like you're right, they're the
The Fed
mechanical
is
effect.
not data dependent.
I know, but the
They're
Fed is the Fed's impact is not really mechanical. If the Fed's impact is mechanical, then they're like that's like the bazooka, right? Like that's like raising rates by like 2% at a time or cutting rates by
I
2%
mean,
at a time.
no, the Fed used to be pretty mechanical. The Taylor rule.
Back in like I mean, think about what was happening back in like the 80s with the Fed funds rate. Like they're fucking
Yeah.
smacking that thing around like crazy. And that's why it was mechanical. If you're shifting Fed funds rates around, like the hiking in 2022 was mechanical in the first like two rate hikes. And after that it was purely sentiment driven.
Yeah. I
And
mean, did we ever even really hit a restrictive rate? I mean, briefly
no,
in
No.
2023, I think we
like
got like
October 23.
we got like a quarter point over inflation. And
Well,
then just now, right, we had a quarter point spread going into the FOMC meeting, which JPOW obliterated.
no, Girk, you gotta index it by end GDP growth, not inflation.
I agree.
Yeah, in which case we have not been in restrictive territory, really.
Not even close.
Yeah.
Fair.
Not even fucking close. So I think actually no, October 23. I think we actually were in restrictive territory because GDP growth was stalling, and then AI, and then GDP exploded.
Oh, you motherfucker! How dare you say those two letters?
Oh, dude, I read an
You mean
album review
government
for
spending exploded?
yeah, they're
Sovereign
the same thing,
AI.
God, hate you guys.
uh, so I read an album review, just quick side thing. So there's this guy reviewed Coldplay's new album, right? I forget what it's called. Don't even care. Hate Coldplay. But at one point he was like talking about a song and he was like, it was the most painfully generic music written by the new Coldplay algorithm Coldplay I. I thought that was hilarious. Coldplay I.
Last Friday I had to listen to people talk about AI for the worst day I've had in a very long.
I can just
We're
imagine
entirely.
you stuck in a professional environment and having to hear about AI, and it pleases me.
I gave him shit.
Nice. But not as much as you wanted to, I'm sure.
No, I mean they're colleagues, so I want good outcomes, but I don't want to develop a proposal that has shitty AI in it.
Yeah, no, the thing is when you're, when your professional reputation is tied to this stuff, I mean, you kind of get, you know, to be a little mean.
Yeah, I just challenged him, and I
Yeah.
convinced myself even more that it's bullshit.
Dude,
So,
I was
Don't want to talk about it. Let's move on.
yeah,
yeah.
seriously.
Um, so the reason I initially brought up housing is according to Redfin, following the Fed rate cut, the number of homes for sale increased by like 900%.
Yeah, well, that's something that I haven't quite wrapped my head around because it's too soon. You'd think they would keep waiting.
We're
What you would
getting real
think is
estate
that you'd
agents that are
have
emailing them.
what you'd
That's what
think
it
is that
is.
you have more mortgage applications, like pre-approvals or something.
Yeah, I guess not. No,
And
I mean, you've got people that are starting to default on their loans. This is what I think. I think you have a
yeah,
lot of people
well,
that are
then it would
starting to
just be a
default on their
coincidence.
loans, and they're like, the Fed cut rates, and they're like, their agents are all like, now you can sell.
Yeah.
And they're
Yeah.
all listing their homes for like massively over market price, but there's no buyers.
Yeah, they're trying to get out from
Yeah,
underwater, right? Or
Because mortgage
whatever
rates
it
aren't
is.
actually going down.
they're going up. That's
Yeah.
awesome. That was like one of the biggest spikes in mortgage rates, single day spikes on either Thursday or Friday in like at least a year or two.
Well, I mean, it makes sense, and I think we even said this a while ago. We even fucking called it that rate cuts would signal tightening financial conditions, not loosening financial conditions.
Yeah.
We called it.
We're here, and but now, inflation is going to go up now that the Fed cut rates, right? Especially if labor is going to remain strong and all the boomers are having to come back to work. Like
I mean, but
we're gonna see an uptick in inflation if any significant amount of the population currently on fixed income rejoins the labor market.
I mean, they're going to have to because they're like anybody who has a fixed income portfolio, right? They're going to see their yields drop.
Yeah.
And if inflation goes up at the same time, right, or stays at the rate it's at, yeah, they're going to fucking have to rejoin the workforce. This is the weirdest fucking economic situation we find ourselves in.
It's fun though.
Yeah,
It's fun to
It's so
it is
strange.
fun.
It's just weird. Like we're
I'm
like what we did in 2020 was so fucking crazy. This is just nuts.
everything's
I'm
just
just glad we're out of
anti-correlated.
ZERP.
We
Zerp
yeah.
is
This
Zerp is dead, right? I mean,
No, no, no. You know they got one more good Zerp in them.
no.
That's the
I don't.
ultimate bear
I don't
case,
think
right? That they
so.
have to surf
Our
one more
debt would
time.
get downgraded before they got halfway there.
I know, and they don't care.
I mean, they have to care if our debt gets downgraded.
I
Because
don't think so.
real yields are going to move to like 10% if we get a debt downgrade.
It's
Like
true.
there's a very real mechanical effect from our debt getting downgraded.
I don't think the rating
I'm
agencies
gonna
have the
go ahead
sense.
and say I think that's maybe a little much closer to where they probably should be.
Yeah,
Well, yeah,
I
Jay,
don't
you
think
think
you're
that the
wrong.
U.S. debt is shit, so
I mean, I think the 30-year should be at 8%, not because I want to buy it at 8%, because that's where it should be.
Yeah, I don't know if I'm in the 8% boat, but I'm pretty close to that. I mean, you got to make a lot of assumptions about current spending levels. I think there's going to be some sort of calamity well before, so you have to kind of price in calamities.
Sure. Yeah. I mean, I don't think the banking system can withstand the 30-year at 6% or even 5.5. But
Yeah, I think
um,
6 is fair. It's like fair value now. I'd probably buy some at 6,
yeah.
but not at whatever it is now, 4.2. Forget that.
why did rates go up? Ooh, that's fun. Because the dollar went back up.
Because our government spends way too much fucking money.
Yeah, we're in like a deficit crisis that we're just ignoring.
Yeah, I mean,
Yeah, I think
big
there are
common
also. I
sense.
mean, there's probably obviously with any macro thing, there's probably lots of different effects, and
There are.
narrative often follows price action, which is to say that people try to come up with a narrative to match price action. But I do think that there is a significant effect from the fact that people are thinking, okay, at some point Yellen's going to have to stop selling short-term duration, and we're getting she's going to go out on the long end, necessarily be there. Also, it started dropping 1%.
The first, I mean, the first real mechanic. You should probably approach this as in the way that it plays out in the market, and like in the order it plays out in the market. The first real significant effect of a Fed rate cut is yields at the front end of the curve decline, right? And a cap is set on them, right, at the federal funds rate, because the federal funds rate is not going to change to the upside in 3 months, most likely, right? And so what that does is that's going to drive down liquidity in the front end of the treasury market in the short paper, right? People aren't going to want it because the yields are no longer worthwhile there, right? Like the value of those has risen because yields have fallen, and so everybody becomes a net seller and no longer a net buyer of bills and short-term debt. And that means that instead the liquidity moves out to the middle or the back end of the yield curve, right, where you move out into the longer dated bills or into bonds. And because of that suck in liquidity, that's where the presumption that Jay Fresh is talking about comes from, that Yellen will not be able to find sufficient liquidity at the front end of the yield curve to continue issuing debt, same as cash, right? She will have to issue longer dated securities in order to find sufficient liquidity, and she's going to have to issue those longer dated securities because they carry significantly more risk at significantly higher yields.
Yeah, it's fair.
So that's most. Here's a big problem I have with like the way economists view macro analysis is that everything's always the chicken. They're always like making up a reason to explain the thing that already happened versus describing why that thing happens, and following a logical approach to how money moves through markets. And so yeah, you're kind of right about that, JFresh. Is a lot of that analysis is done like post hoc, right?
Well, it's
And,
because everyone is they're not digging into and really understanding the underlying theories that would actually drive various things in the economy. They just follow like trends and they just parrot, lines that they've been told in the past about old correlations.
yeah, well, I mean, that's
And
all they have to
we're
do, right? Is come up with an excuse for their clients.
yeah, but I
Ultimately,
mean, we've been in a time now for a few years uh, where you might as well everything that's based on a correlation in the you can throw out the window because everything's different, and so all those correlations are worthless now.
yeah. I mean,
Except for
it's.
maybe except for maybe the Buffett.
I
Even
know.
that one's
I know the pickle
different,
jar had a really
actually.
hard time wrapping their head around like yield curve uninverts, then falling dollar bearish, right? Yield curve reinverts, rising dollar bullish. Um, that kind of like flip, which we recently had, where like inflation becomes bullish again. That really threw people. That really threw people for a loop. But that has to do with how rates are being priced across time, right, relative to inflation now, and then future inflation expectations, and the way in which the bond market is pricing the forward risk. So we're like
Yeah.
rate cuts are really bullish if there's just a couple, and they're really bearish if there's a lot of them really fast.
Oh yeah. I mean, I think most people. Sure. Yeah.
Rates up, dollar up, tech up. Need to brand that into my brain. Well, the dispersion trade benefits from increased leverage. You get increased leverage when, dollar denominated assets rise in value, which they do when the dollar goes up, right? And so and rising yields means dollars going up, or those are pretty tightly correlated. Yields up, dollar up, dollar up, dollar assets up, leverage up, dispersion, right? And then it carries on, propagates throughout the system. But yeah, I mean, tech ultimately, like the easy way to look at that is tech benefits from a stronger dollar. They're multinational corporations with huge piles of cash, right? So a lot of their valuation is in cash that they're holding and not doing anything with. And so they immediately, I mean, benefit from that, but they also benefit in the fact that all of their sales transfer back to the dollar, right? Um, and so they tend to make higher profits when inflation and the dollar rise, and then also their fundamental valuation increases. Also,
Yeah,
everyone
what's
wants
the
to long tech, and that's where the leverage goes. So you
yeah,
have
what's the price to GDP of Nvidia these days?
Isn't it like 10%? Something
It's
ridiculous.
something I think
Actually,
it's
no.
more.
Yeah. What is it worth now? 2.5.
I think so. I forget what
it's got to be
NGDP is
close to
actually
three.
at.
And GDP's around 28.
Nvidia is
Okay.
3.06 trillion.
Nvidia's back over 3 trillion. So yeah, at 28. Yeah, 7% of GDP.
Jesus, dude. Yeah, it's kind of
Yeah, but
crazy. You think about
that's
when you add up the Magnificent Seven, you get pretty close to the entirety of NGDP.
yeah. I think you get like half or 40% or half, something like.
But these are forward valuations, so it's obviously not apples to apples, but still fun to
Yeah,
think about how ridiculous it is.
I love how we call BS made up 10-year projections as forward valuations.
I
Do,
say that word with a lot of
yeah.
disclaimers.
Do we really think Apple's gonna grow like 5x in the next 10 years? I don't.
Do you think Meta's going to grow 5x in the next 10? If you think Meta's going to grow 5x in the next 10 years, you think that's like the population of the world's going to grow 5x in the next 10 years?
So yeah, I don't know. I mean, Meta's
Hold
trying to
on.
push into
No, the
new.
number of bots visiting Facebook every day is going to grow 10x in the next 10 years.
you know, Meta. I mean, without question, I think right now Meta is severely overpriced. I think there's a lot of risk in a lot of the things that they're trying. The new glasses that they came out with, I'm kind of on the fence about. I was pretty negative about them just because of what I know about what it takes to manufacture those things. But I've actually talked with some other colleagues who do work in waveguides, some of those manufacturing of those optical structures, and I think there might actually be a path to those hologram glasses, much cheaper than they are now.
Augmented
So there's
reality. Well, I mean, the ones that they
yeah,
released
so
are only they're
not
internal use only, right? It's not
they're
like a
internal use
product
only
yet.
just because they're super expensive.
Yeah.
Because they're like 10 grand a piece to make because they can't make them at scale. The methods they're using are low, but and very expensive and time consuming.
They have to find a way to
But
offset the cost of the manufacturing of them in
They'll sell them
order
for $300 as a
but I
live
think
feed
in
and
order
then
to
but
get
I
you on
think
AI.
stabilize.
I think they can. I think they can.
Yeah, right. You
It
just
would
put
require
ads inside people's houses or in their field
no 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 no
counterparts'
no.
house.
I think they can dramatically decrease the cost of manufacture of this, but it's going to require a lot of capital expenditure, and I don't know what their plans are there, how half baked it is, because they're going to have to spend a lot of money developing essentially their own fab to make these things.
Well, you know what they're going to do,
And
Jay Fresh.
with how much money they're spending on AI, they can do both. So I would be more inclined to be interested in these classes and think that they were more serious about it if they actually started transitioning capex from AI to the glass as it's like it seems like a toy they're
But if
happy
they're
with,
no longer investing all of their capex into AI, they just become Google, like the rent of the Mag 7.
No, they just become Equifax.
Well,
Sorry, was that
futures,
too on the
just so you
nose?
guys
I
know,
don't know.
futures are projecting 15% growth in the S&P by December of 2029.
Yeah. And I remember you remember what the remember what the projections were for 2024
Yeah.
quarter 4 20 yeah last year they were like 260, 270, something like that. They're down, which puts us at a price to earning of 20. So we're creeping up.
We're getting way up there. What's the Schiller PE right
No, I don't know.
69. Ah,
now?
Nice.
36.94. So we're almost where we were in July of 2021. Just a bit short.
I love how I love how we're at that PE right now, but the price of these stocks is just barely at new all-time highs.
The median is still 16.
Jesus Christ.
Yeah, but we haven't seen. I mean, we only saw 16 in the last 25 years in the depths of the great financial crisis. Before that, it was always above 20.
Yeah, we were like at 20.
You have to go back to like you have to go back to shit. You have to go back to like 19 almost the 1980s. So we're definitely decade, which is hard to wrap your but um we've really been fighting the correction for decades.
Yeah.
Just gooning, dude. It's the world's longest goon sesh.
It really
I mean,
is.
I think it's got to come to a head at some point with the boomers really starting to age out of everything and even in significant numbers. So they're the ones that hold all this stuff, right? And have gained the most. And I just don't think that future generations can really bear that, can buy all of that off of them. I mean, I guess they can all give it away to their, their.
You know what's the best part about that though is the earnings yield on the S&P is now at 3.33%, which is half the historic median.
Yeah, yeah, and
So the earnings
the
yield just
dividends.
keeps declining and the
Yeah,
S&P keeps going up.
yeah, the dividends are extremely low right now. They're low enough.
Well, because there's double taxation on dividends. Until they get rid of that, I mean, we're just gonna perpetually live in a market that's driven by corporate buybacks. Jayfish, you cut off again.
Sorry, I keep leaning back.
No.
I slowly lean back into my until someone.
Oh, here's a really useless number. S&P 500's price to book value 5.5 5.15x.
All right.
So we're trading at 5x book value, which is the highest since 2000 and higher than we hit at the peak of the dot-com bubble.
Nice.
Yeah.
Yeah, it's quite interesting times. Nobody wants to hold dollars, so they're holding everything else.
They're holding
This
tech.
is yeah, mostly, but they're holding other things too. Homes and stocks.
Yeah, REITs and tech are pretty much like the golden children right now because and they're just levered to the tits into these fucking things. It's crazy.
I've been having a lot of fun on because everybody's getting now that rates are moving, everyone's piling hard into the discussion of excuse me of money on the sidelines. So,
Oh god, not that one again.
oh,
Oh god.
it's back hard.
Do
Back
they know what
super.
happens to the money that's in short term treasuries when rates go down at the front end? That
I
money doesn't
mean,
go into equities, it just leaves. It just goes into RRP. And the
it doesn't even
liquidity
matter.
will
There's no
just drain out of
okay.
the market.
This is the thing that I've been saying. That's been driving them crazy because they just can't understand it because they're not trained in like rate based processes. Um,
Critical thinking.
no, well, I mean traditionally around like there's you can be trained on like rate balances, right? In various processes, we do it a lot in it. You should be doing it a lot in finance, but they don't seem to be doing that. But and I've been saying that I've been thinking about this kind of it's a really I think an important concept to actually understand, which is at all times fundamental law. This is always true. It must be true. At all times the net flow of money in a market is zero
Yeah.
because every buyer is a seller. There's nowhere to put it. Whatever goes in comes right back out. Unless the only exception to that, at least in the equity market, is our beloved CNIS.
Mm,
But even
Yes.
CNIS is getting smaller.
it's true. Shriveling.
Yeah. So if your money is not locked up in settlement, it's gone. It's not in the system. It's not in a stock. It's right back into they're in on RRP or somewhere else, right? And you can if you want to, you can buy a bond with it, and then it goes to the right, or it goes to somebody else. Puts it right back in. So the only way that you can extract money out of the system is basically um, buying fresh bonds. You can put it in the TGA. That can take money out of the system, or um, taxation, right? Not
Yeah.
running a deficit. Anyway, but that's something. So that leads into something else. Is
Decline in dollar also.
yeah, yeah, sure. But that leads to something else that I've been kind of thinking about is one of the side effects of Yellen having to sell, lots of short dated bonds is that she has to have a higher balance in the treasury.
Yeah, because all the interest payments are due immediately.
Right. And so if she moves to longer duration, that could actually have we've been talking about these competing effects and how it's hard to navigate why, things seem to go in the opposite direction of conventional wisdom.
Yeah.
If she moves to longer term bonds, the short term effect of that is that she can drain the TGA, which would be a cash infusion into the short cash.
Well, first of all, it depends on the TGA balance as issuance shifts, right? Which may not be very high. Historically really low in quarter 3 and 4 of the fiscal year. Um
True. Yeah.
but also it depends how far out she issues that.
Yeah. Just something to keep
Like
in
she'd have
mind.
to
It's
issue she'd have to issue bonds and step away from bills entirely.
Yeah, I mean, but what she will be doing is so there will be a cash influx. There'll be a higher balance of cash or sitting in the economy. But the people who holding bonds will have risk. So the question is, will that risk offset the the influx of cash or not? I don't know. I don't know what the answer to that is. But anyway, yeah. So back to the money on the sideline side. No matter what, what matters is what is the percent holdings that everybody wants. How much of somebody's portfolio do they want to be cash, and how much do they want it to be something else? And so what happens is people will transact in the I want to call it inflow or outflow. Will transact within a market until it reaches that equilibrium point. So if there's $7 trillion and people want to own 5x more stocks than they do cash portfolio, then the stock market will go up to 5x times 7 trillion, right? Until people stop trading it up. So that's the way to think about it. So you have to think about not where's the money going to go. You have to think about what are people going to want to do with their portfolio allocations go.
I mean, well, a lot of what you're describing is kind of like the effect of velocity, right? Like as velocity slows
Well, yeah, I
because
mean, as velocity slows, naturally, people have will have a higher, slightly high. I don't know how much higher, but they would have a higher cash balance just because it's not moving as quickly. But well, I don't know. You can make the same argument just like with the TGA. If it's moving, you need to have a larger balance so you can maintain positive balance when all these things are moving.
yeah.
So I don't know. I don't know what the effect velocity has, but if you think going forward, so these are effects I'm thinking, right? If there are people um, buying homes, right? So if prices of homes start to drop and people start wanting to buy homes, what are they going to have to do? They're not sitting in cash. They're sitting in stocks. They're going to have to sell their stocks to buy their home. But right now, I think what's happening, partially what's happening is that because home prices aren't going down, prices are too high for the people that want to buy them. They're just sitting in stocks and wait. Well, I'll just invest and wait.
Yeah.
And so because of that, so you have you have one segment of the population that homeowner that owns homes and stocks who's just living it up right now. And then you have one section that owns stocks and is renting but would like to own homes. And so based on the weakness that I've seen in the housing market and I do believe we have very high supply of homes. We just have had a lot of spend. And if that demand is what I think is probably is as the price of homes come down, the price of stocks are going to go down to go and purchase these homes. And then the people who are now, then the question becomes the people who sold the home likely lost. What are they going to do with that cash? Are they going to jump back in to the stock market? My guess is probably no. I think they're probably going to have a lower risk tolerance than the people who are leaving the market. So, yeah. And also given the fact that we're already at one of the lowest cash percentage holdings in history,
Yeah.
I don't see a ton of upside. So I see, to be the biggest bubble, to be as big as the 2000, 2008 bubbles, we got to be 5,900 by the end of the year. We're already most of the way there, right? How much more? We're already, if you prorate it just to where we're already in the biggest, as big of a bubble as the other two. So, I could see us maybe probably grinding up to 50, being super bullish. But to me, it seems like there's much downside.
But what about NQ?
What about it? I don't know.
NQ's got a lot more room.
Does it? I mean, where's the money going to come
back
from?
to its all-time high. From all the stocks, from all the mid caps and shitty manufacturers.
That's fine. But I think that's kind of where we're at. We're gonna see if something's gonna go up, something else is. I don't think we're gonna see any more of just never-ending pump upwards for everything.
Yeah, I agree with that.
Unless we start money printing in a significant. If credit expansion continues to accelerate, which it is ramping up, that could support meaningfully higher prices going.
That's fair,
but hasn't quite happened yet.
Well, that'll only expand as inflation drops, or like forward inflation expectations decline. But if they're on the rise, it's going to start to tighten again, which is what we're getting now.
Yeah, I think
in the very near term, obviously, but
I think inflation expectations are mostly pseudoscience.
Yeah, they're bullshit. But I mean, something like it has to be. Like they still have to determine a price, right? So it's not like they're going away, and they do have an effect,
right. But here's how most entities determine what they think future inflation. They look at what it is.
Cut out.
Oh, God damn it! Here's how most people determine what they look at what it is.
Okay,
that's it.
Now I think you're just fucking with us. You literally cut out at the same part of the same sentence both times.
God damn it! All right, I'm gonna say this one more. Can you hear me?
Yeah.
Okay. Here's how people determine their inflation expectations. They look at what inflation is right now. That's it.
Yeah. Well, I mean, and then it's either higher or lower, right?
No. Inflation expectations lag actual lag, not lead. Lag.
That's fair. So they're really
It's
looking at
all
what
Philip.
inflation was yesterday.
Yeah, well, they just have
We're
they
gonna,
think inflation is mean reverting. Basically, historically, it's
you
a
know,
little higher than it is today. It's probably going to go back up to that point.
I just want NQ to move up because I over leveraged into long TQQQ on Friday.
Yeah, you've been really hammering everything I have, confirm bias. I mean, that push up at the end of the day on Friday was pretty convincing.
Yeah,
The weird
was
thing though is, I mean, I've looked a lot at sort of past peaks. The very interesting thing about this one is that VIX is meaningfully higher. It's been getting. I don't want to. I'm not. I don't want to risk doing too much TA on the VIX, but in
we
periods
do have some
where,
correlation stuff we could look at on VIX.
all right, yeah, I was just gonna say in terms of like when things start to turn, VIX starts to turn a little bit before price does,
Yeah.
typically. Um, so like the case of 2020, for example, you got a higher high or a higher high. The bottom fell out in 2022, 21. The same thing. VIX started dropping meaningfully. Price was still yet to see its peak, and then the bottom fell out of that
Well,
too.
I think somewhere in here, like, we're gonna get a repositioning as the yield curve reinverts, right? So when the yield curve crosses back over and reinverts, everybody's gonna need to they're gonna need to kind of flip flop their positioning, and we'll probably get some volatility out of that occurring, right? But then if inflation continues to rise and labor remains strong following that repositioning, then we could see, VIX go back down to like forward volatility expectations drop back down to like where they were in the early part of the year again, where we start
Yeah,
to see like the long term expectations for vol decline. Right now, those are really high. That's something that's interesting, is that like VIX 3M has really stayed well above like the contract in front for VX.
yeah. Part of me is still waiting for them all to just get burned by realized vol because they're really betting on higher vol.
Yeah,
I don't know how I feel about it. I mean, it's quite a jump. It's a substantially bigger jump than the other periods where things started to fall apart.
it's true.
So I don't know. Yeah, like the crash in October 28. That one just came out of nowhere.
Oh, the like overnight,
Volmageddon.
the fucking Nikkei crash. I guess it was. I mean, that's what it was, right? It was like a flash crash on Nikkei, and then just the bid ask
Yeah.
on VIX getting blown out. But I mean, we almost got another flash crash on Nikkei when they elected the new PM, but he quickly came out and backtracked everything he'd ever said. Um, so that
Yep.
that
Like a
stabilized things
like
for
a
now.
like a good boy.
Yeah,
Yeah, I mean, if VIX goes back under 15, that's I think to me a signal that they've got it under control and they're gonna put this baby another big leg higher. Um, but if they can't get it back down, I think they're really gonna struggle with any momentum because I mean nobody's putting in more into the options market. The leverage seems to be pretty flat.
yeah. Yeah, I've noticed that we
Um,
haven't really gotten a lot of, even though we've been moving up over the last week, the amount of short vol like piling in seems to be minimal.
Yeah, I mean that's part of the reason why vol is high. The
Yeah.
short vol has been more scared to take as big of a position. So yeah, I don't know. I mean, obviously the market's
But
just
I
been
wonder
going
if that's just a
straight up
factor
for
of the leverage now that the leverage ratios are getting better, right? And we're starting to see the carry get levered back up to its like pre-August levels. If we're just going to see that leverage translate right back over to short vol like we did, and like following the earlier correction this year, the like March, was it March?
yeah. I mean
Which was
that's
our
true.
which was our
The
first vol correction. It was like
I mean
April.
a big there is a big correlation between USD and so yeah, if USD JPY goes meaningfully above 150, 150, 155, I think that's going to coincide with short VIX. I think that's all you need to know. They're getting back in.
Yeah. It looks like they
So
are.
those are things I'm looking for. Yeah, it does look like they. Yeah, it does. Well, we'll see. I'm not quite ready to call it yet, just because VIX hasn't responded quite as violently as used JPY. Obviously, there should be a lag, but
Well, we'll have to wait till we'll probably have to wait till like the next big expiration to see if things reposition a lot. So I
yeah,
would say we
I
probably
I would
keep like the elevated 30-day outlook on vol until like the 15th, and then after the 15th we'll get a much better picture of how things are going to reposition.
yeah I wouldn't feel comfortable with saying the short ball trade is back with a vengeance until VIX is 15. To me, that's a signal that we ain't going
Correlation's a
down.
pretty good indicator of that too. Like correlation has been elevated since July, and it hasn't really come back down to those lower levels. I mean, we're still higher than we were at the back end of, or low. We're still higher than we were at the back end of August. Especially, what's interesting about this is that like the 3 month is really lagging. Like there seems to be like more than enough willingness to sell vol for nothing in the 30-day window, but nobody wants to sell vol for nothing in the 90-day window. And there's some like election risk there too, right?
Yeah, that could be a factor as well.
Because that's going to be coming up in the next, well, less than 90 days. So um
Uh, yeah, so like 30 days. It's like 20 something days. It's election day.
yeah, yeah,
Let's look it up.
it's November 7th. So it's like a
I
month.
know because I skipped the election 5 years ago. It was I think it was. Yeah, because my son was born on November 5th. And I ain't got time for that. Is Dork dead?
I don't
No,
know,
I'm
man.
just fucking around with
He
shit
fucking
right now.
hasn't said anything this entire time.
I mean, you guys are having such a captivating conversation that I'm not like, what am I supposed to say? Because I don't have anything to add that's like incredibly profound, like you guys are saying, and I'm just like, I'm gonna let you guys cook. I'm not gonna interrupt because I'm really enjoying what I'm listening to.
I know what Dork's coding. He's not listening. He's just coding. Oh,
I
your
can do both.
conversation is so wonderful. Oh, yeah.
I mean, hey, I am multi-failing right now, but
So the
when
days,
we
here's a fun historic correlation that means nothing. The days leading up into the 2008 election was the top of the GFC prior to crashing.
wait, I have a question. Where are we on the election seasonality chart?
Oh God.
I mean, it makes sense from
Oh,
like, I mean, if you consider that the Treasury is politically influenced, right? Then wouldn't you want to just pump everything right into the election and then you just let it go?
You mean short the fuck out of oil so people don't complain about gas prices in the election?
Yeah,
Yeah.
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 Till your short gets blown up.
Well, I mean, if you're the
Um,
USA, who gives a shit? You just
yeah,
dump more SPR and you're good.
it's true.
well, we're running out of SBR to dump. Still haven't filled it.
I still think
That's
we're gonna get an oil deficit by the end of the year.
I don't know.
Yep.
You still have a good amount in the SBR, right?
That has nothing to do with incoming oil, though. That's not. They don't determine a deficit based on the amount we have in the SPR.
Oh, you mean in terms of like flow into the
Yeah.
country? Yeah, maybe. Well,
And the Wall Street Journal released this thing that Saudi Arabia was just gonna open up the tap and like let oil dump to 55 a barrel, and they were like, "The fuck we are." They're like, "We're absolutely not doing that."
yeah. I mean, I would imagine that they would
Oil
even
responded. I
go.
mean, that's what kicked off like the big dump in oil was that WSJ article too.
I would go so far as to say they would probably collude with Israel to strike an Iranian oil field. That
Yeah, then they could open up their the fucking
I
oil that they've
mean,
been sitting on for a
The
year and a
Middle
half.
East is not a monolith. They'll turn if their oil doesn't make them money.
Also, don't forget that the U.S. has two failed states to bring freedom to on the
Oh, so much
Mediterranean.
freedom.
So much freedom to the Mediterranean coastline. They're about to enjoy the greatest that democracy has to offer.
Yeah, let freedom ring.
Yeah.
God, I love democracy. It's the best, dude.
It's just spreading it feels so good, you know?
Yeah, seriously.
Making sure that everyone has equal access to democracy at the cost of their GDP and, natural resources, of course. But
Has North Carolina changed their name to Ukraine yet?
I don't know.
They need some aid.
They've got plenty of aid. I don't know what the fuck everyone's talking about. The FEMA like $750 is immediate. You can like sign up for that shit online and it's in your bank account the next day. But there's like 8,000 other fucking aid packages that are available if you live in North Carolina. And for some of you guys that actually do, look into that. Like you can get SBA emergency loans, you can get state disaster preparedness loans, you can get grants. There's tons of options. There's lots of fucking money that is available to you if you were currently dealing with that crisis. Don't listen to people on TikTok. It's bullshit. There's a lot of money there. And FEMA, despite being under the Department of Homeland Security and significantly less well funded than it has been in the past, is still replete with tons of cash that they have nothing to spend on. So yeah, there's plenty of money there. Don't buy into that bullshit.
Don't do what
There's
I did when I went to
And make
college.
sure that
always
you take
money
advantage
banana
of that
stand.
money because it could help you out a lot and help you recover.
Yeah, no, don't do what I did when I went to college, right? When I went to college, I didn't even know resources to help me graduate college existed, so I just made it way harder for myself. Don't do that. Just make it easier for yourself. Get the fucking aid.
Look, took out private loans before you blew all your public loans.
I just paid for the whole thing with a student credit card. It's all good.
Oh my god.
Have you never heard of? Never mind. You know what the
Yeah.
Pell Grant is, Dork?
I'm a first gen college student. I didn't even like when I went to community college. I assessed in because I didn't know I could use my high school transcripts.
Ah,
Yeah, I was that stupid.
Yeah, I feel like a lot of
Yep.
students don't know
Here you
the
are. You
amount of
made it.
aid available to them.
Yeah, I got a degree. Whee!
There's a lot of business owners that don't either. Think of all the people that made bank on PPP loans. If you live in North
Oh
Carolina,
yeah.
that could be you.
Yeah, they're
Yeah,
the new welfare state.
they all bought Airbnbs that they're trying to.
They all bought Airbnbs and then used the equity on those Airbnbs to buy more Airbnbs.
Yeah.
And then they created YouTube accounts to tell everybody about how they bought Airbnbs and made even more money from that than they did from the Airbnbs themselves.
Yeah, and then the DOJ caught them.
They totally
And
caught them, dude. They caught
didn't do
all of them.
anything to them at all.
Yeah, dude. They caught every one of them, dude.
They caught them all and then said, it's fine, just keep the money.
A boy can dream.
I am feeling better. Thank you for asking, Jim Martin's wife.
I'm also feeling better. Thanks for asking.
No one asked you, but that's good to know. I'm glad you're feeling better.
I'm not. Yeah, I'm actually also coding right now. I'm back to work.
Your productivity was slumping hard.
It was.
You were
It was rough.
You were right below Carl. Like your line had moved right below Carl at the last Scrum Dumpster meeting.
I believe it.
But it's okay.
I wasn't even.
You literally published one thing, and now you're miles ahead of him.
I haven't published it yet, but it's close. I might be just about there actually. We're 100% this week. Just trying to fine tune it.
I'm excited to see it.
Yeah, it kind of works. The problem is everything's at fucking Gamma Max right now, so it's hard to do any screening with. Like I literally went through like
pretty much everything in the S&P is maxed out.
Yeah, and the first like 30 tickers that I went through, every single one of them was at or above Gamma Max, and I was like, "What am I supposed to do with this? Which one isn't 30% above Gamma Max?"
I mean, yeah, proximity to GM. Fucking throw it in your scanner.
Yeah, but we're not selling that. We're doing proximity to delta neutral.
I mean, sure, but I don't know. If you wanted to filter a little better, that's what I would try. But
yeah, just throw it on the list. It never ends. Scope
creep. Throw it in the pile.
Yeah, just constant scope creep.
Yeah, seriously.
That's what happens when you like the product that you're making. Ooh, it'd be really cool if we did this.
That's pretty much all of our fucking meetings is where we do that.
Yeah, that's like 80% of the bullshit we talk about in meetings.
Yeah. Oh, dude, bro, we should totally do this thing because it'd be so sweet. I don't even know what's going to come out of it or if it's actionable or anything, but bro, you should do it.
Yeah. Well, because that's how you figure out if it's actionable.
It's like a Nike commercial. You just do it.
Yeah. And then we get awesome. We get awesome stuff, right? If we hadn't done that all along, we'd have less awesome things.
True. That's very true. We made some pretty awesome shit in the beginning.
Should we just short everything if it's all at Gamma Max? Oh, sweet summer child. No.
It can cling to Gamma Max as Gamma Max rises, as NVIDIA did for like a year and a
half. Yeah. As the S&P did for several months of a clip.
Yeah, there was like a 7-month window where it was like zero vol, just like straight up with Gamma Max.
Yeah, just 30 points a day forever.
Yeah.
We did that. Yeah, we literally did that from October to March.
Yeah.
Like just nothing but realized volatility. God, straddles were so awesome. I want the straddles back.
Is Master breaking out?
Oh, maybe. Bitcoin's been going up. Risk on, right? Risk on, so leverage up.
Oh yeah, it's doing a little breaky boo. It's almost a reverse, like a hard reversal. Look at my little scanner working.
Thanks for keeping me from blowing up my account again this week. No problem.
Yeah, things look pretty bullish this week, even though I'm macro and super excited about upside. Short term,
Yeah, should we
I
do
don't
our
know that I.
projections? We haven't done projections in
Sure,
a
let's
while because
go
I've been
for it.
dying. All right, gun it. Who wants to go first? I think I won the last one, but I don't care. That was 2 weeks ago, so it doesn't matter now.
I don't remember anything in my life from 2 weeks ago. I'm gonna say I'm gonna do it based on my super scanner to see if there's any validity to it, even though I haven't finished tweeting it.
Mm-hmm.
Um, things look bullish. A lot of things are reversing upwards. I'm gonna say, what do I want to say here? Are we gonna get a new high this week? That's the only thing I care about. Are we gonna get a new high? Yes, we are.
Yeah, why not? 820, 830.
I don't know if we're gonna go that high.
Really? All right.
Mm,
It's not that far away.
I know. What's going on next week? We kind of have to go through that.
There's CPI.
I forget doing that.
CPI
Of course there
and
is.
Fed minutes. So it's
Ooh,
Fed minutes,
consumer
CPI,
credit change.
PPI.
Fed minutes are irrelevant.
They might be kind of
Uh,
interesting. But yeah, probably doesn't matter. I mean, the Fed doesn't matter, so.
a lot of speeches.
Damage control.
I think they just love the speech. So FOMC's on Wednesday. I mean, probably see. But, okay, so Thursday morning is CPI.
Mm-hmm.
Friday is PPI and machine sentiment, which I think is bullshit, but people like it. All right. So Wednesday, we're gonna hit 57.90.
By end of day Wednesday?
Yeah. And then Friday, we're going to close at 57.25.
57 what? Ooh. Big bear.
Is it?
Kind of.
All right.
Well, it's lower week over, like close over close.
Yeah, it'll be down, slightly down. I would call it flat, roughly flat. We just kind of always gravitated around that
What do
the
you got,
entire
George?
week last week.
Up 40 basis points end of week.
Give me the number.
Hold on. Let me.
It's like
What was the closing?
775.
1.004 times. What was the last closing? 57.51. 57.51. That gives me 57.74 on the dot.
I'm just
Hey,
gonna be
close enough. I'm
I'm
down
just
for
gonna
that.
be more bullish than you guys because I have calls.
Perfect.
The bias I expect from us.
Yeah, it's the best bias.
Yeah, based on my positioning.
Shop is it Gamma Max?
Well, I couldn't have bought calls and been wrong, right? That would be ew. We wouldn't want that to happen.
Hell no.
This is nice. This is nice. I like this. So you think what CPI is gonna be cool?
Me?
Yeah.
No, I think it should be hot.
Why isn't it super bullish then?
Because rates are going to go up.
People are going to be scared about rates.
But profits. You know what? I'm changing my projection now.
But cost of credit. Oh shit, Dirk got more bullish.
I'm gonna get more bullish. Fuck this shit.
Dude, I think they're gonna sell the fuck out of the 5,800 if we get up there.
They always do. And then they get blown out.
Yeah, they're gonna do that Wednesday night. And
I didn't say calls or puts.
Blown up Thursday morning. I wish we could just get inflation back to like 5%, and then we could just go up to 6,100, right?
Well, no one's going to take inflation seriously until it goes back up to like 3.5. It's just a blip until then.
We're gonna need several months of like 0.4% inflation.
I mean, 0.2 even for like 3 months would be enough to start getting people nervous.
The entire time. It's never gone down.
I thought it was like between 1 and 2.
I think we had 1 month of 1.
Really?
Yeah.
Jesus Christ, dude.
It's just like, go look at the
inflation
CPI index. It's just gone straight up since 2020.
God damn.
Yeah. Inflation's still over target.
How high do you expect TQQQ to go up? I don't know. Prior high? Well, slightly lower than the prior high due to vol decay, right? So, I don't know, maybe like, let's draw a fucking line. We'll just pretend like that means something. Let's say 80, 82, 83. This isn't the first time I've longed TQQQ in the last couple of months. It just seems like the next best time to do it. Like this week we had a chance to fail. And we didn't. So, up, you know, right? I mean, like, NQ deserves to go back to its all-time high.
Oh, it deserves to?
Yeah. I mean, that's the only way that you can support a soft landing narrative or a no landing narrative, right? Is if tech is at its prior values. You can't be like, oh, we're in a no landing scenario, but you know, Nvidia is still missing $500 billion in market cap. That doesn't make sense.
I'm gonna say something that might be a little controversial.
It already sounds
but
controversial.
I think a soft landing is a recession.
It's a recession?
Yeah.
It is.
Well, it is. Yeah.
But have you not been paying attention to CNBC lately? We're not in a soft landing anymore. We're in a no landing scenario.
Oh, they're saying no landing again?
Yeah, we're just going to refuel mid-air. Yeah, they've started saying no landing again. It's been too long since we had a red candle, so you know how they go.
Yeah.
And by that I mean it's been like 2 days.
Yeah, I love how like literally headed straight into a recession or accelerating right into it. The Fed was late. Fed sucks for being so slow. And then now this week, the Fed made a huge mistake cutting so much. And this is why, children, we do what? Year over year. Which is what the Fed was doing until they needed an excuse to cut. And then they're just like, well, the last 4 months look pretty good. I hate everyone.
Yeah, why didn't they use the last 4 months to raise rates back in March when inflation was just skyrocketing? They were like, oh well, you know, year over year it's flat.
If it goes up, it's transitory. If it goes down, it's a permanent recession that will never recover once the Fed goes to 0% interest rate.
I love how his mic cuts out every time he's making an actual point. We really need to get Jay Fresh a new microphone.
That's what I'm banking on.
Oh, are you just like push to talking and muting yourself so you can get a new microphone?
No, my mic sucks. My cat knocked it over. It's been buggy.
Yeah. But you're a cat.
Sorry.
Wait, hold on. What if
What?
Israel does something crazy? What? What do you mean crazy?
What
Everything
if Israel goes
Israel's
more into war?
yeah. Are they gonna go more into war with Iran?
Super
Here's the
war.
deal. All right, there are two countries north of Israel that have no governments. We're gonna take those one way or another. Okay, that's gonna happen. Those we want those because they're nice. They're nice countries. Well, at one point in time they were. And then we're gonna issue a bunch of debt to rebuild them, and then we're gonna own them for a little while, hopefully. Well, we'll try to. We've failed a lot at that recently. But yeah, we want those extra countries. That's a good place to have countries for us.
Worked out so great the last time we did that.
Yeah, but those weren't as good of countries. Like Syria,
Mm.
Lebanon, way better than Afghanistan, right?
I guess. I don't.
these are countries with warm water ports.
Mm. Woo.
Imagine lending out debt to other countries and you
Hey,
yourself can't pay. Well, you lend it at a higher rate so that way they pay off our debt.
hey, Gork.
What's up?
You know what popped up on my bullish reversal scanner?
What?
TQQQ.
Oh no. I hope your scanner sucks.
I said bullish reversal.
Oh, okay. Okay. Wait, bullish?
Bullish.
All right. Yeah, that's good. Good. Excellent. I'm already
That means
long.
that's the uppies.
Yeah.
Bullish reversal means an uppies, right?
Yeah.
I've
Okay.
I bought like 50 contracts at 75. Let's go. I've got two
Yeah. All
weeks.
right. Slamming right into Gamma Max.
Sounds good to me.
Makes sense. 76.
I think it's broken Gamma Max before.
I mean, Gamma, but
Just yeah, I feel like the Qs are tricky because they have their own volatility index.
I don't know. Hopefully nobody says anything about soft iPhone sales this week.
Nvidia isn't Nvidia having like their big AI conference?
Oh yeah, they're having
Yeah,
like
no one's
a
gonna say anything.
sovereign AI factory conference.
Yeah, no one's gonna say anything bearish about AI for at least 4 days.
Is it 4 days long?
I don't know.
Shoot me.
I'm sure you can't wait to get on Twitter and hear all of the bullish things they have to say.
I can't wait to get on Twitter and complain.
I feel like a lot of your existence on Twitter is just you shouting into the void.
That's all of it. Yeah, that's my whole life. You know, like 5 years ago, I entered a field with a collaborator, so I was interested in it. And I entered it, and I feel like 3 years later, and the solution that thousands of papers that have been shit out in this field, and nobody cared.
Are we talking about carbon
So
nanotubes?
no, we're
Oh,
talking about. Well, I don't want to dox myself.
all right. Well,
It's not.
Self-lubricating dildos,
yeah,
of
you totally
course.
didn't just give away your child's birth date earlier.
Yeah, I mean, how is that doxing?
Yeah, how many people were born on that date, right?
Keeping you from doxing yourself and giving away too much information is. A constant endeavor for me. I've deleted so many of your posts on the Discord where you've just straight up doxed yourself. Like photos of your home.
I'll do it again too.
And I'll delete them some hours later. But every time one more person learns who you are.
Has anybody figured out who I am yet?
I mean, Nitu knows who we all are because he's probably
he just knows who everybody. He knows who everybody in the entire Discord is.
Yeah.
I just assume that he's OSINTed everybody.
Yeah, me too. No,
like he's like, oh, you're an interesting person. Who are you?
He's a consummate professional. He would never do that.
Right. Well, that's the thing. He might do it, but he would never record that he did it and what end his results. I think that's the ethical part. Is like he can do it. Potentially, I don't know though. I can't speak for him, but I would assume that's what that means. Is if he's bored, he'll do it. And he's more record back. Oh, neat, cool.
You know, JFresh, we're only $250 away from testing the trend from the Great Depression.
Oh shit!
The ultimate TA.
Yeah. Well, that line has only ever had 2 tests in the S&P history. One was 1929, the other was 2000.
Well, okay, but that's not a trend yet, right? It has to have 3 tests to be a trend.
Well, I feel like we're gonna make it one.
PA is all made up anyway.
Yeah, it is.
Yeah, I think there's like millions of traders at desks just watching that line. Like, we're about to hit the 1929 upper resistance, guys.
I guarantee
get ready.
you there's millions of hedge fund managers that are staying long until we hit that line.
Dear God.
Yeah. It was like, well, can't sell, haven't tested that line yet. That's the bubble pop line. And what else are you going to do with your philosophy degree from Harvard?
Jesus Christ. Besides run a hedge fund?
Yeah.
Oh, man. This is such a great little thing we do. We just talk shit about everybody. It's the best.
It's fun. Good times.
All right. Well, see you guys at the all-time high this week.
Yeah. Yeah, I'm excited.
Yep, see you there.
All right.
40 bips up.
All right.
You guys have a good one. I'll catch you later. Thanks for coming on.
Too.
Thanks for having us, bud.
Yeah.
See ya.
See ya. All right, guys. I'll be around the rest of the day. If anybody has any questions I wasn't able to get to them, feel free to hit me up. I'll be working on Pickle's picks. And I'll see you guys tomorrow morning for market open. Later.